Hey, and welcome to SimplerOptions.com. My name is Don Kaufman. Tonight, what are we looking at over here? August 5th. I'm looking actually at Starbucks right now and what has become an utterly explosive move to the upside. Ladies and gentlemen, I am a contrarian, and the position I'm looking at here in Starbucks happens to fit really all of the criteria I have, in essence, for being able to build a contrarian-based trade. And I've done so for you this evening. First and foremost, I want to zoom into some of the recent trade here in Starbucks. Again, quite the explosive move to the upside. Let's give everybody a heads up. There is a dividend in there, but it's okay. It already happened. It happened yesterday, so don't fear the dividend. Starbucks is up another 0.5% today, up some 32 cents, and you can see it's right at the high that happened previously following the earnings announcement back here on, again, on July 23rd. So we're right back up to those highs. So why a contrarian? Why now? Well, most of this, in terms of being a contrarian, has to do simply with the sheer magnitude of a move in an extremely short period of time. Okay, not to say that, if you take a look at Starbucks and you look back multiple years, I mean, as far back as you want to go in terms of time over here, we can go back 15 years on a daily here. And again, we're not just at all-time highs. We are exploding to new all-time highs almost on a daily basis. But again, as I zoom in here, again, some quite definitive reasons for wanting to be a contrarian, one of them which being this was a fail point for Starbucks in recent trade. However, I'm not completely nuts. I'm not going to tell you to stand in the way of a freight train, and that's exactly what Starbucks has done. Yet I've used the exact same pieces of criteria on underlying such as Apple, which I've taken short positions in Apple. That's actually been rather effective. Many of you, if you've been joining and watching these videos for a period of time, have actually seen me take short positions inside of Netflix. The irony was I took a short position inside of Netflix, and it happened to be, again, kind of standing in the way of a freight train. It worked out, though, in Netflix. That's right, a bearish position that worked out inside of Netflix. And many others. And I've done this in Tesla, again, Apple, Netflix, and on in a number of different products. So Starbucks fits, my mold for just that in creating what's ultimately going to be a contrarian style position. Now, to take the effective contrarian position, okay, my trade is not just about looking at a chart here. It's statistical moves, it's percentage moves, it's the fact that it's just off of an all-time high and, of course, 52-week high. But what's much more important is how I'm going to construct the position. If you're going to stand in the way of a freight train, number one, give yourself some time. Okay, so I'm going to go 37 days out in this particular circumstance. Okay, and I'm going to use defined risk. Because again, there's no way I'm going out and to sell options naked, in a product that's been exploding to the upside. First and foremost, to sell products, an option specifically on a product in such a low implied volatility climate probably is not going to be effective by any stretch of the imagination. So we're in the 23rd percentile in terms of implied volatility. That's not something I want to sell. Like, I can't grab onto that and want to sell it. So I'm going to go 37 days out. I could say I've already executed the position in this case, but I'm going to turn around and go buy. Okay, and I am buying a vertical spread. Now, the vertical spread is going to be right around a risk one to be able to make one. I'm going to buy the 60/58 vertical spread for about 94 cents. I do believe I just got an execution on this moments ago. Okay, moments ago I got an execution on this right at 96 cents. So I filled it at 96 cents. Price has since backed off a little bit, but right around a 95-cent debit. So you're buying the spread for 95 cents. What's the most you can make? Well, on a $2 wide spread, you can make $2, but you paid the 95 cents out front. So ultimately, we're not here to try to make a full dollar. Want to exit the trade when it makes 60 to 70% of the initial debit. That means you're going to look to exit this spread right around like that $1.55, kind of $1.60 range over here. It's risk a buck to be able to make a buck. What's great about it is we have 37 days to be right, 37 days to be wrong. Hey, long live Starbucks. Just dip down below 58. Please dip down below 58 sometime between now and 37 days from now. There's a 75% probability of it touching below 58, but depending upon when that happens, okay, is what matters. So again, we'll need Starbucks here below the 58 level 37 days from now to kind of maximize profitability. But we want to exit this trade when we've achieved about 60 to 70% of profit potential. If you're curious more about why I take certain contrarian positions or some of the criteria behind that, ladies and gentlemen, is really what I am going to discuss in this Saturday's class. So I've got a class that's coming up, simpleroptions.com/consistent. And what I'm going to be doing during this class is really I'm breaking the class into several major pieces. I am going to be covering a tremendous amount about intraday trading. Intraday trading, getting a better feel for intraday trade. That does not necessarily mean that you have to be trading intraday. You may receive a much better execution on a trade if you just have time, for instance, just glance the markets on a day-to-day basis. Just at a glance of the market, there's so much information that you can obtain by looking at things like, a futures quote, like where the volatility futures are. In addition to it, there is one kind of a quantitative indicator that I happen to use to discern direction on an intraday basis. So intraday is a portion of the class. Okay, strategy and trade logic is a big portion of the class, but I do believe what most people kind of want to see and what I'm going to try to provide during this class, how and why do I take contrarian positions? And I'm going to provide very specific criteria, exact percentage moves that I need to see, okay, why, okay, at all-time highs I might want to walk in and short a particular product out there. So join me again. It's going to be this Saturday, August 8th from 2 to 6 Eastern Standard Time. There's also a live trading component if you would like to do that. 4 hours of live trading. We're going to be executing on a lot of the theory and discussions from the previous Saturday's class. Thanks a lot, everybody. This is Don Kaufman. Be back on later in the week. Have a good week. Bye.